Three consumer-related names that I want to focus on right now. Royal Caribbean, Packaging Corp of America, and Sherwin-Williams. They're all up double-digit % this year. Scott, when I look at the big moves in these names and I listen to what the companies are saying, I think they're suggesting that the American consumer is making a big comeback.
Well, I'm going to probably talk about this for the next 4 years, Charles, and I think you're exactly right. And the American consumer is going to make a comeback here because I think that psychologically we've had a sea change of how we look at things now. It's like we have this idea that maybe around the corner we are going to get that growth we've been waiting for the last 8 years. So I think, yes, psychologically it's unquantifiable, I agree. But I think it's more important than anybody else that can really think about. And I think some of these CEOs that tap into it, like I think Donald Trump's tapped into it for the country, I think that they're going to be the big winners.
Emac, I mean, listen, we've already seen the needle move on all the sentiment readings. What I'm saying is that we're going to see the manifestation of it. And I think we have to a degree with some of the big winners this week. Again, MarineMax, a boat maker, same store sales up 28%. You don't go out and buy a boat unless you're really confident about your economic future.
But look at the retail stocks that are pointing down right now. Why? It's that talk again of that border tax. Walmart is in D.C. right now saying, you do that, you're going to really hit our bottom line hard. And in fact, the National Retail Federation says you're going to basically 98% of the clothes bought in the United States is from overseas suppliers. Those same stocks are going to get hit, according to analysts, by a border tax. I mean, yes, the exporters, Boeing and Dow Chemical, are saying, rah, rah, GE, let's do it. But these guys, wow, they could get ice bad. And some of these smaller names, the pre-tax profits could get wiped out by a tax bill that's 5 times of what their pre-tax profits were.
Yeah, there's no doubt that they're worried about that. So Koch Industries. Latest thinking is that we won't get a tax cut now until summer. Now, we know Stewart wants it to be retroactive. So I want to go around the block to everyone. Start with you, John. Listen, the corporate tax and individual tax, those are the 1-2 punch everyone wants to happen sooner rather than later.
Yeah. I would say that we can go ahead and wait. It doesn't need to be retroactive. I mean, we already have government debt at about 75% of GDP. That's sky high compared to previous recoveries. And, of course, it's going to go higher when we have the next recession. So let's take it easy with fiscal stimulus. And, again, focus first on that cost-free stimulus that can be obtained through deregulation.
Jeff, I think if we don't get those tax breaks, we're in trouble.
I think the tax breaks are mandatory for this economy to move forward, and I have to agree with Stewart. I think they need to be retroactive. They need to be 2017 tax cuts and not 2018 tax cuts, because a lot of people are deep in a hole, and these tax cuts will help them dig out if we get them retroactively. You know, for our theory to work, Scott, they need tax cuts. People keep more money in their pocket. They may spend it under this president.
And right, you know, that's going to be part of the consumer's recovery that you talked about earlier. Yes, I think that's part of the things that he's got to check off on the list. He's going to do them, and I think they're going to be retroactive, yes.
All right, guys. Thanks to Jeff, John, and Scott. You guys, fabulous as usual.